Well, joining us from CommSec is Tom Piotrowski. Tom, how's the market looking today?
Tom, good morning. It's not looking too bad. We're going to kick off in positive territory, not in an emphatic way. The futures are telling us that the ASX 200 will be up by just a little under 0.2%. It comes on the back of what was a constructive session, I suppose you could call it, a day of consolidation, particularly for Wall Street. Investors still ruminating over the CPI figures, which were released a day earlier. They were probably more a cause for discussion rather than being compelling. We saw measures which were moving in the right directions, others weren't. We've still got some producer inflation numbers to look at in the next day out of the US, and of course that all ladders up to the US Federal Reserve decision on interest rates next week. So there is an element of caution reflected in prices at the moment, particularly where technology stocks are concerned. So the Nasdaq is leading the modest declines, down by 0.5%. The broader market, the S&P 500, is down by 0.25%, and the Dow Jones is largely flat at this stage. So European markets did quite well last night. We saw record highs for the French market. The Pan-European Stock 600 index was up by around 0.2%, hitting a new record high. But what stood out in Europe, Tom, was the improvement for resource and energy names. So we've seen a moderation in the US dollar in the last day. That has been supportive as far as commodity prices are concerned. We've seen most metals prices move high. You've got copper at 8-month highs, up by around 3%, oil up by about 3%. The conspicuous absence, however, is iron ore. So it continues to move lower at the moment, around $105 per tonne, and analysts are suggesting that that $100 mark is probably where it should be getting to. So that's creating some headwinds from time to time where the big miners are concerned.
There you go. So likely positive opening. Tom, thank you.